Somewhere in America right now, a couple in their early 30s is parked outside a grocery store, engine off, staring at a receipt. Not because the groceries were unusual, because they just did the math on something bigger, and the number won't leave them alone. Can we actually afford this? Not will we make it work? Not people have always managed. Can we sit down, add the real numbers, and honestly say yes? For a huge share of American households right now, the honest answer is no. And that single, quiet moment of arithmetic is reshaping an entire country's future, one spreadsheet at a time. This is a video about the true cost of raising a child in America and why that cost has quietly become one of the most important economic stories of the decade, even though almost nobody frames it that way. Here's why this matters right now, beyond any one family's grocery bill. In 2005, the United States recorded its lowest number of births since the 1930s. South Korea's birth rate sits near 0.72 children per woman, less than half of what's needed to hold a population steady. Japan, Italy, and Spain are on similar trajectories, and when economists talk about this, they usually reach for cultural explanations. Shifting priorities, delayed adulthood, changing values. But underneath the culture, there's arithmetic. And arithmetic doesn't care about your values. It just is what it is. So let's actually run the numbers, because the headline figure alone doesn't capture what's breaking household budgets. Depending on the state and the estimate, raising one child from birth to age 18 in the United States now costs somewhere between roughly $300,000 and $400,000, covering housing, food, healthcare, and childcare. That figure doesn't include college. $300,000 per child. For two children, a household is realistically looking at somewhere between $600,000 and $800,000 over 18 years. That's not a lifestyle upgrade. That's a house. In some states, that's two houses. The single biggest driver isn't diapers or clothes, it's childcare. Full-time daycare in a mid-sized American metro, now commonly, runs somewhere between $1,800 and $2,900 a month per child. In expensive cities, that climbs past $3,000. For context, that's often higher than the median mortgage payment in the same city. Parents are routinely paying more to keep their child cared for during work hours than they're paying for the roof over that child's head. And that expense doesn't run for a year or two. It runs for roughly 5 years before public school absorbs part of the cost. Now, let's put this into a real household budget, because the abstract numbers only become uncomfortable once you see them stacked on the top of each other. Picture a couple in Denver. She works in marketing, earning around $78,000 a year. He teaches at a public school, earning around $61,000. Combined, $139,000, comfortably above the national median household income. On paper, that looks like a financially stable, upper-middle-class household. They have a 6-month-old daughter. Their mortgage runs close to $2,900 a month. Daycare adds another $2,200. 2 car payments and insurance add roughly $1,000. Groceries, inflated by the cost of formula alone, run close to $900. Utilities, phones, and internet add another $400. Health insurance premiums, even after employer contributions, take another $700. Student loan payments from both parents add over $600 more. Diapers, wipes, and basic household costs add a few hundred on top of that. Add it all up, and this household, earning well above the median income for their state, is spending more than they bring home. Not barely breaking even, running a deficit of several $100s every single month before a single dinner out, a single unexpected car repair, or a single copay. This is not a household making bad decisions. This is a household doing everything the personal finance industry tells people to do and still losing ground every month. Here's the uncomfortable math underneath all of it. In the mid-1980s, a single median income could support a modest home, 1 car, groceries for a family of 4, and still leave room for savings. Reproducing that same modest lifestyle today, same size home, same quality car, same grocery basket, requires a dual-income household earning roughly 2.5 times the old median. Not for a better life, for the identical life. That's not inflation drifting upward. That's a structural repricing of ordinary adulthood, and children sit at the center of it. So who can actually afford kids without quietly bleeding out financially? Based on real childcare, housing, and living costs across different metro tiers, the household income, ACMA where parenthood stops, being a slow financial erosion, and starts being genuinely sustainable, sits somewhere between $185,000 and $240,000 for one child. For two children, that range climbs to roughly $240,000 to $310,000. In the most expensive American cities, that number for two children can approach $360,000. That's not middle class, that's close to the top 5% of American household income. Here's the part that should genuinely unsettle you. Plenty of families earning well below that threshold have children anyway. And from the outside, they look fine. They usually aren't, quietly. Most of them are doing at least one of four things: undersaving for retirement, pushing the true cost of their children onto a poorer future version of themselves, carrying rising credit card or home equity debt to smooth out the monthly shortfall, leaning on unpaid family labor, usually a grandparent providing free childcare that never shows up in any official cost calculation, or simply going without, no vacations, no dining out, no dental work, no emergency fund, just quiet endurance dressed up as normal life. None of that is failure. It's the mechanism by which we made it work, survives as a cultural story, even while the underlying math stopped working years ago. Now zoom out, because this isn't only a story about individual households stretching their budgets. It's a story about what happens to a country when the math of an ordinary decision no longer works for ordinary people. A country that effectively prices parenthood at the top of its income distribution eventually runs short of parents. Fewer births today becomes a smaller workforce in 20 years, which becomes fewer workers supporting more retirees, which strains pension systems and public health care funding built on the assumption of a growing population underneath them. This is precisely the trajectory already visible in Japan, South Korea, and much of Western Europe. And the United States is now tracking the same curve, just a few decades behind. Nobody voted for this outcome directly. No policy explicitly decided that ordinary parenthood should require a top decile income. It emerged slowly from decades of housing costs rising faster than wages, childcare costs rising faster than inflation, and public support for families quietly failing to keep pace with either. Here's the contrast worth sitting with. The popular explanation for falling birth rates is cultural. People today supposedly value careers, travel, and independence over family. The economic reality is closer to the opposite story. Most people still say they want children. What's changed isn't the desire, it's the price tag attached to acting on it. And there's a particular irony buried in all of this. The same economies now anxious about shrinking birth rates and future labor shortages are the ones that spent decades allowing housing and childcare costs to outpace wages in the first place. The system didn't just fail to encourage parenthood. In many quiet ways, it priced it out. So the real question this leaves behind isn't whether individual families are making good or bad choices. It's whether an economy that requires a household to sit near the top of the income ladder just to afford the most ordinary human decision on the planet can keep functioning the way it always has. Once enough people quietly do the math and decide the answer is no.